Let me ask you something most people avoid asking out loud. Is it still possible to become a millionaire? Starting now. Not if you started early. Not if you had rich parents. Not if you already own assets. But now. In a world of inflation, layoffs, rising costs, and shrinking opportunities. And an even harder question. What if you're starting late? Or starting with very little? Most people quietly assume the answer is no. They believe wealth is a race they already lost. That the door closed before they even realized there was a door. But history doesn't agree with that belief. Every decade creates new millionaires, not because they were lucky, but because they positioned themselves where money was flowing next. And that's what this video is about. Not hype. Not shortcuts. Not get-rich-quick fantasies. But 7 real investment paths that, if approached with patience, discipline, and consistency, can realistically turn ordinary people into millionaires by 2030. This is a long-term wealth conversation. So slow down. Because wealth is built quietly, not urgently. Section 1. What a millionaire by 2030 really means. When people hear millionaire, they imagine mansions, supercars, and luxury. That misunderstanding stops them before they start. Because becoming a millionaire doesn't mean having $1 million in cash, living extravagantly, getting rich overnight. It means net worth, assets minus liabilities. It means owning things that grow, being patient while others consume, playing a long game. Most people quit early. Now let's be honest. 2030 is not far away. Which means this isn't about extreme risk. It's about direction. If your money is consistently moving into appreciating, productive assets for the next 5 to 6 years, the math starts working in your favor. But only if you stop trying to look rich and start trying to be wealthy. So ask yourself, if nothing changes in how you invest today, where will your finances be by 2030? Section 2, Investment Number 1, Real Estate, the boring millionaire maker. Real estate is not exciting. And that's exactly why it works. Most millionaires didn't get rich from one big win. They got rich from owning land and property over time. Real estate creates wealth in 3 ways. Appreciation, cash flow, leverage. Even modest properties compound quietly. You don't need to own skyscrapers. You need time and consistency. And here's what most people miss. You don't need to buy in perfect locations. You need to buy where growth is inevitable. Infrastructure, population expansion, economic migration. The millionaire mindset asks, where will people need to live and work in the next 10 years? Not what looks impressive right now. If you start small, land, rentals, shared ownership, and reinvest returns instead of upgrading lifestyle, real estate becomes a wealth engine. Ask yourself, are you waiting for the perfect deal or missing years of compounding? Section 3, Investment Number 2, Stock Market, owning pieces of the world. The stock market scares people who don't understand it, but it rewards people who respect time. Stocks are not lottery tickets. They are ownership. When you invest in strong companies, you're betting on a human progress, innovation, productivity, a global growth. The wealthy don't chase hot stocks. They build positions. Index funds, blue-chip companies, dividend-paying businesses. They invest when markets are boring. They keep investing when markets are scary. Because time, not timing, creates fortunes. Here's a powerful truth. Someone who invests consistently for 20 years often beats someone who tries to be smart for 5. If you start late, consistency matters even more. Ask yourself, are you trying to outsmart the market or outlast everyone else? Section 4, Investment Number 3, Businesses and Entrepreneurship. This is where wealth accelerates. Owning a business means an unlimited upside, control, a leverage of systems, people, and ideas. But not all businesses are created equal. Millionaire businesses usually solve boring problems, serve repeat customers, scale without proportional effort. Service businesses, digital products, distribution, licensing, franchising. Most people fail in business because they chase passion instead of demand. The wealthy ask, what do people already pay for, and how can I deliver it better or cheaper? You don't need to invent something new. You need to execute consistently. And here's the mindset shift. A job pays you once. A business can pay you repeatedly. Ask yourself, are you trading time for money or building something that survives without you? Section 5, investment number 4, skills that compound. This one is underestimated. Skills are assets. High-income skills, sales, copywriting, software, data, marketing, strategy. These skills increase earning power, fund other investments, create optionality. Most millionaires didn't start wealthy. They became valuable first. And value attracts money. If you can increase your income aggressively in the next 3 to 5 years, investing becomes easier, faster, and less stressful. Ask yourself, if your income doubled, would your financial stress disappear, or would your lifestyle just expand? Section 6, investment number 5, private investments and partnerships. The public markets are only part of the game. Wealthy people invest privately. Startups, small businesses, joint ventures, agriculture, real estate syndicates. Why? Because private deals often offer better terms, less competition, more control. But this requires education and trust. You don't rush into private investments. You learn. You observe. You start small. Ask yourself, are you building relationships that give you access, or just information? Section 7, investment number 6, intellectual property and content. We live in an era where ideas scale globally. Books, courses, YouTube, software, brands. One piece of content can earn for years. This is why creators, educators, and builders are becoming millionaires faster than ever. Not because it's easy, but because distribution is powerful. If you can teach, explain, entertain, or solve problems publicly, you can monetize attention. Ask yourself, what do you know now that could help someone 5 years behind you? Section 8, investment number 7, your mindset and environment. This is the foundation. No investment works without patience, discipline, emotional control. Most people don't fail because of bad opportunities. They fail because of bad reactions. They quit too early. They panic too fast. They compare constantly. The wealthy protect their mindset fiercely. They choose environments that normalize growth, reward patience, encourage long-term thinking. Ask yourself, does your environment push you forward or pull you back? Section 9, what if I'm starting late or broke? This is the quiet fear. The fear nobody admits. But here's the truth. Starting late doesn't disqualify you. Starting confused does. Wealth is built forward, not backward. You don't need perfection. You need momentum. One investment. One skill. One decision at a time. History is filled with people who started late, but started intentionally. Ask yourself, if you fully committed today, what could change by 2030? The roadmap comes next. This video wasn't about pressure. It was about possibility. Millionaires aren't special. They're positioned. And positioning starts with clarity. Now here's the problem. Most people know what to invest in, but not where to start. That's why the next video matters. In the next video, we'll break down a beginner's investing roadmap, step by step. No hype. No overwhelm. Just clarity. Because wealth doesn't reward urgency. It rewards direction. So here's the final question. What will you do with what you now know? Like this video if it expanded your thinking. Comment, which investment surprised you most? Subscribe, because this channel is about building wealth that lasts. Your future doesn't start someday. It starts with the next decision you make.